Good morning, good night, good afternoon to everyone who's joining. No, it's quite early here in the UK where most of us are based. But if you're joining from Asia, Middle East, Africa, the US, we're super excited to have you all today. We'll wait a minute or two as more folks trickle in, and then we'll get started because we have a packed agenda. All right. All right. Okay, let's get going here. So, welcome, welcome, everyone. Super excited to have you all for our globalization webinar today in partnership with HSBC. Um, I want to start off by giving a bit of backstory on why we did this report and why we're really excited to host this live session today. I'm Kim. I'm the CEO and co-founder of Sightline. We have been covering the climate tech space for the last 6, 7 years. We started off with the newsletter CTVC or Climate Tech VC, and I started that, back in the US, right? And we covered a lot of the key trends and takeaways happening in climate tech in the US. And now that climate tech has really gone global, we wanted to develop this report to give a zoomed out picture on what's happening in climate tech beyond the US, even beyond Europe, what's happening in LATAM, in the Middle East, in emerging markets like India. And what we found is climate tech looks a lot different than just climate and emissions. I think this year we're hearing a lot of buzzwords like energy security, resilience. There's a framework we really like called the New Dual Order that puts the energy transition in the perspective of not only, decarbonization, but really thinking about energy security, economic growth, and then decarbonization as the third lever. And one of the big takeaways I found super interesting in this report that we did in collaboration with HSBC is that climate tech also looks quite different than just climate. It's a lot of different shapes and colors, focusing on the emission side of the picture, energy security, economic growth, but all throughout all of the countries, all of the regions that we went deep on, I think the common thread was really innovation. And innovation is very much shaped by the specific region, the specific culture, the specific, on the ground, even physical geographies. And so that's a little bit of what this report is about, is taking that zoomed out picture on globalization, but really understanding what regional dynamics, what regional geographies, what regional cultures, economic growth shape how climate tech innovation looks like on the ground. I just came back from China myself 2 weeks ago, so that's obviously an elephant in the room as well, and we'll be talking a bit about that towards the end. But first, I wanted to intro Thomas Miles, who runs the strategy for climate at HSBC. We've been extremely excited to have this partnership with HSBC. I think HSBC represents, one of the leading global banks, not just in the world, but particularly on climate tech. So without any further ado, Tom, excited to hand it over to you to give a bit of background.
No, thank you very much for having me this morning, Kim, and inviting me to present. And thank you everyone for joining today's session. I think just echoing Kim's comments there, I think our partnership with Sightline is one of those key ones that we really value and really supports how we access the climate tech ecosystem. And it's great to partner with Sightline this year on the globalization of climate tech report, following obviously the capital stack report we partnered on last year. I think it's worth noting, obviously, climate change is a global problem and it needs global and scalable innovation solutions to meet this challenge. And as a global bank, we support customers across markets and across over 50 jurisdictions, helping to accelerate the deployment of those decarbonising solutions. So it's really exciting that this year's report shows us how capital, innovation, and deployment is really rapidly globalising in the climate tech space. And I think there's three major forces that the report highlights and that we've also observed in market that are really defining the next decade for climate innovation. The first of those is economics. So clean technologies are achieving cost parity much faster than we expected. If you look at solar and wind, they're the cheapest forms of energy in most market, while other technologies are starting to come down their cost curve. And we're really seeing that unit economics is playing a key role in how climate tech solutions can scale. In Europe, you've seen the end of free carbon market allowances. The CBAM and EU ETS are really tilting industrial economics towards low carbon decarbonisation. I think the second strand that we've seen is around policy alignment. So you're starting to actually see stronger frameworks be implemented that are replacing some of the weaker fragmented incentives that we've seen previously. I think this is definitely clear in emerging economies who are coming forward with new initiatives, new policy frameworks that fit their own needs and the strength that they bring to the global economy. You've seen this in the report where it highlights India's grid expansion programs and their hydrogen initiatives through to interconnection projects in Central America as well. And then the third element is around capital mobility. So when we speak to investors and we're out in the market, we're really seeing that investors are now starting to look beyond the traditional markets of the US and maybe even Europe to a degree and looking into Southeast Asia and the Middle East, particularly from an institutional and sovereign investor perspective. They're looking at markets that have clear regulatory signals that show that there is that demand and desire to move in a certain direction. And the data in the report really shows that Europe's venture funding gap is actually starting to close on the US, which I think is really interesting. And then you've also got regions like India that have demonstrated the ability to produce exit pathways and are now one of the leading market for climate tech IPOs. So I think the pipeline of investable opportunities is deepening fast and it's increasingly global. The next phase of transition is really about deployment at scale. How can we transform prototypes and pilots into pipelines and power plants? And success will really depend on aligning finance, infrastructure, and policy. At HSBC, we seek to be the bank of choice to catalyze emerging climate tech, and that's from international expansion through to supporting first of a kind projects. And we've got three things that we really feel where we play a critical role in this ecosystem. The first is connectivity. So technologies, offtake, supply chains, finance, they all flow internationally. So whether you're a developer in India seeking European offtakes or you're looking for feedstock in Asia Pacific, HSBC, we have the global footprint to support you in those connections. I think the second element is we provide tailored capital solutions from early stage venture debt for pre-revenue companies all the way through to structured project finance for those really pioneering deployments. And the last part is around access to capital. So as a bank, we act as an introducer. We have an amazing network globally, and we're really well positioned to connect startups and corporate and institution and our corporate clients to help support investment into climate tech companies for scale, but also to support corporates to decarbonize. So I'm really excited to be part of the discussion today, and I'll hand back to Kim, who will just run through what the agenda looks like for our session this morning.
Awesome. Thank you, Tom. All right. The one thing I forgot to mention in my intro, which is also a bit of the elephant in the room, is this week is COP, right? It's COP 30 in Brazil. And so one of the reasons we put out this report this week and did this webinar today is really just a signal to say that climate tech is global, but also it's more than just policy, right? It's all this innovation on the ground that we're seeing for a multitude of reasons. And so I think, we're very excited to host this webinar, very excited to introduce Julia Atwood, who's our head of research and leads a lot of our research on energy transition technologies, climate technologies, and was really the driving force behind this report. So today we're going to talk a bit about, we just did welcome intros. We'll talk a bit about the globalization report overview. We'll have about 10, 15 minutes running you through a lot of the key takeaways. If you haven't yet, we'll drop the link to the report to download it. And then we'll have a bit of a discussion and really open it up to audience Q&A. And so feel free to start popping questions in the Q&A throughout the whole session. We'll definitely make sure to answer those as best as we can. So it should be a bit of a lively discussion, two-way discussion, but we'll kick off first with some of the key takeaways. Julia, over to you.
Thanks very much, Kim. So we just added the link to the report in the chat. So if you haven't read it yet, click on that because I'm going to be giving you a pretty quick run through. We're going to focus on charts, but there's a lot more information in that report. So at Sightline, we've been thinking about technology readiness in terms of a curve that looks sort of like this for a long time. That technologies have to move through all of these stages and basically have all of these things in order to achieve commercial liftoff. But they really also apply to regions. So regions or countries have to have IP and tech development to independently grow an industry. They have to have the finance and the VC side to keep innovators there. And they also have to have growth money to allow those solutions to scale. You have to have players in the region that are willing to buy or maybe pay a premium for new tech. That's where the demand comes in. And then for deployment, you have to have a growing project pipeline to allow that industry to scale, along with the domestic companies to champion it. On the economics, there really has to be something that makes your market special. So whether that is, cheaper commodities or access to supply chains that are already scaled for another purpose. But pretty often, that thing that allows you to compete with the business as usual solution is actually policy. That kind of underpins everything. So this is the route that we think regions are going to take to scaling climate tech. But it's not always all roses and wonderful. There are a lot of warning signs for a region. And so we flagged some of them here. If there's a real lack of research capability in a region, then it's going to mean that you often don't control that industry unless you have scaled it massively as China has. On the financing side, if you don't have a government that's able to provide folk or some kind of concessional financing or grants, it's going to be pretty tough to get that industry off the ground. And then on the demand side, you really have to have somebody local that is going to be your champion and be sort of this first source of demand. So an economy that is really focused on services and doesn't necessarily need to use the output of that climate tech is going to make it more difficult for that region. Then you need the supporting infrastructure for your deployment. So you need these large infrastructure projects to bring the supply chain, the ports, the roads, the bridges, the up and downstream processing that will help that industry to grow. And then on the player side, if you don't have a really strong policy push for change, it's tough to find those champions that you really need. On economics, if a region has fundamentally high labor or commodities costs, then it really has to find some other compelling advantage in economics in order to compete. So this is how we've been looking at how these regions are scaling. And so we wanted to test basically where we were on these factors. This is how we did it. We tallied up all of the events that we could find through our signals feature for each of the regions that we covered in the report, which you can see on the y-axis, and all of the readiness factors that I've just talked through on the x-axis. And what you can see is that Europe was really leading them, even outpacing the US in a lot of these metrics. So we've been hearing a lot of talk of shifts towards Europe, that there's a lot of momentum there, that people are thinking about it as the next big market. And this was our evidence to say, okay, there's something behind all of that talk and momentum. But as many people as you have excited and wanting to do something, there's still the fundamentals to deal with. And this is how we've ranked each of these emerging climate tech regions across our readiness. So most regions have a weakness somewhere. In Europe, the thing that we really flagged is that there's still a lot of regulatory and permitting red tape. And in some cases, that's delaying some deployment. Every other region has a bit of work to do on incentives and policy. It's not often as strong as what you see in Europe. But there are also a lot of bright spots. So development banks in LATAM have a ton of experience in deploying renewables, and they could turn all of that experience and resources to deploying first-of-a-kind projects in other industries. Singapore has incredibly strong technical universities and the capital stack to deploy them. And India has massive companies that could champion new industries and really leverage the enormous amount of demand that's coming out of that country today. So if we look at where investment is going, there's no doubt that these are smaller VC markets than the US. Europe is really the only challenger, and then you have this long tail of smaller markets. But when we were looking at these numbers and thinking about the overall trends, we realized that what these other markets could offer is stability. So they haven't gone through the same massive swings that you saw in US VC. The incentives and the markets themselves are pretty stable. So it doesn't change as much. And you're seeing similar numbers across all of the past 5 years. The challenge for these markets is really finding and the mega deals and the companies that can support them, because that's what's kept the US really topping the leaderboard. Incredible competition for companies that are well known, have a good solution, and are starting to deploy. That's really what you need to see in these markets in order to see these numbers rising to the same levels as the US. Obviously, there's a big gap in the capital stack where the US has had a lot of prominence for many years. So we wanted to look at how the domestic versus US versus international share of investors compared across all of these markets. The outer pies that you're seeing here, these are participation in deals, and then the inner circle looks at investment. So Europe, there are plenty of domestic investors and they're really active. So you can see that they're making up the majority of both the deal participation and the investment. Singapore as well, you have massive growth investors in GIC and Temasek. And then in India, you start to get into this kind of like difference between deals and investment. So there's tons of deals involving a domestic investor, but then when you look at the investment demand, it's a much lower percentage. So what that says to us is that a lot of the big ticket deals are really being driven by international players. And then in MENA and in LATAM, the majority of it is international. But investment only really tells a part of the story of climate tech deployment and development. Projects are really the true test of an industry maturing. So in the report, we go through project deployment for a number of sectors that we think are representative. So they give a good sense of what's happening across climate tech in energy, in transportation, in industry, and in carbon. So I'll use a few of those to talk about the different factors of the regional and sector readiness, and to highlight how these markets are developing. So we start with ammonia. We're seeing that a lot of project pipelines are pretty diverse. So it's really different from the way you see VC investment, where the US is massive and then you sort of have everyone else. Projects are in a lot of different places. And one of the most diverse is ammonia. This is partly because most of these countries want to export green ammonia to the EU when they brought in CBAM and with the EU ETS continuing its development. But these countries are saying like, hey, I think I can make it cheaper than the EU can domestically. And I can make this an export market and sell it on when CBAM fully comes into force. But what you can also tell is that most of this chart is pink. So this is all like planned development. We haven't seen those markets materialize yet. And that's really highlighting how difficult it is to develop a really robust export market, especially with all of the trade and tariff challenges of today, but also how important that source of domestic demand is in moving projects from planning to deployment. Then we wanted to take a look at long duration energy storage, or LDES. So this is a really strongly policy-driven market. There's basically three places with procurement mandates, and then you kind of have everyone else. And I'll say that I looked at this chart a couple of days ago. These are from a couple of weeks ago, and the UK has really made a big shift here in announcing a lot of new LDES projects. So on the Sightline platform, we have all the latest information. So maybe it's now becoming a top four with the UK there. But essentially, these are the places that have said, we specifically want long duration energy storage, and we're going to put a requirement in place for companies to procure it. So this LDES basically has the policy and the tech bit of the readiness curve, and now it's looking for the everything else. But green cement is an example of the readiness curve and incentives working well. So Europe has a large majority of the green cement pipeline across a few of its countries. And it has an economic and a policy incentive through carbon pricing, through having players with experience in producing cement who can shift to those green technologies. It has the technical ability to develop it through its universities and through its startup environment. And then it also has demand from domestic construction industry and crucially from governments. Governments drive an enormous amount of demand for cement through public infrastructure. And so this is all of those elements of the readiness curve coming together and demonstrating how you can get more green and blue in these charts by structuring those incentives really well. So we've talked about looking for the next $10 billion market, looking for the next US. And in reality, I don't think you're going to find that because the market is in a different place and emerging markets are expecting a lot more from climate tech than just emissions. So you can see that the spread of technologies that each of these regions are investing in is really pretty different from the traditional trade, the transportation versus energy, which one is going to come top in each year that we've seen in the US and in Europe. So they're thinking a lot more about what do they want new technologies and new energy and new industries to deliver for them. And it's different for all of them. So in India, you have pollution and then incredibly cheap solar that is driving a micro-mobility transition and the electrification of everything. And then in LATAM, it's thinking about how can it leverage the clean power that it's already built for clean growth through data center investments and its natural resources in the bioeconomy. It's a huge part of what companies in this region focus on, and it's something that they know they can leverage. So we're watching really closely what comes out of Brazil, the host nation for COP. In MENA, there's a lot of conversations about security. COVID-19 really brought to their attention how reliant they were for some industries on imports. And so they're thinking about supply chain security, food security, and import independence, and investing a lot in things like ag tech so that they can become self-sufficient. And then you have Singapore, which is a tiny nation that needs to be resource efficient across everything. They're thinking, well, how can we use advanced grid tech to make the energy system more effective? How can circular economy make industries and the use of resources more efficient? So in all of these markets, emissions just aren't really enough anymore, but there are plenty of co-benefits to climate tech to leverage. So that is my very quick run through of the crucial charts. Tom gave you a great overview at the beginning, and so now we're going to dive into some questions that Kim has for us.
Awesome. All right. Thanks, Julia. That was fantastic. And as she mentioned, that was a very, very high level preview of the report. The report itself is like 60 some odd pages. There's a lot of really great case studies as well on specific projects, specific companies that we've been talking to and seeing on the ground in these different regions. So definitely give that a look. We're going to hop into the discussion part now, which should be 10, 20 minutes, but for those who have seen those charts, have questions, or as we're talking over the next couple of minutes have questions, feel free to pop them into that Q&A box down below. We'll try and get to all of them if we have time. Otherwise, we'll definitely make sure to get to them after the webinar as well. All right, so let's get into it. I know, Julia, Tom, you both have not only spent a lot of time in these different regions, talked to a lot of companies and investors, but in some cases, like Tom, you're actually backing a lot of the companies and technologies in these spaces as well. So I want to start off focusing on Europe because that was one thing that really stuck out to me, right? That chart showing the different readiness categories for all the different regions, with Europe, for the most part, being green with the exception of deployment. And I think generally there is this expectation that Europe will take on greater climate leadership, or there's at least optimism that Europe will continue to lead on climate, although it is clear that there is some softening there as well. So, Julia, I'll turn it to you first. What do you think behind the scenes on Europe, and how do you think Europe is going to continue to play this climate and security sort of dynamic into the future?
Yeah, I think the main thing with Europe is that they can afford to be much more aggressive. And we've kind of seen the beginnings of that with the UK contracts for difference for their CO2 pipeline, with the investments that we've seen in Stegra, which is a green steel company. So, I mean, we talked about Europe in the report as the cradle for industrial decarbonization, and it has the sort of stick incentives there. I think what it needs, since a lot of the funding in the US has really been redirected towards that defense and security aspect, Europe needs to become what the LPO basically was in the US. So looking at projects, taking some risks on some first of a kind projects rather than just continuing to bolster the infrastructure that's already there. So I think security overlaps with a lot of this. Like
Mm,
Europe has been very open for a long time. They trade with everybody, but that has come back to bite them in some cases. So we saw this with Russian gas, and suddenly gas prices are
mm.
spiking. That's a great example of the alignment between climate tech and security. And there's a ton of those to be found. So thinking about that trillion euros that the EIB needs to deploy, they should be thinking about not just the next 5 years, but the next 10 to 15. And what would they need to be self-sufficient and green then?
Yeah, definitely. That makes a lot of sense. Maybe turning a bit from the public funding side to more of the private funding side. I'm curious, Tom, you all have spent a good amount of time in emerging markets. I know you all did a trip last year, this last year to the Middle East and are looking really globally. How are you seeing investors in particular on the ground, either in those domestic markets or either in, more of the US and European markets? How are you seeing them approaching these emerging markets around climate tech?
Yeah, I think first and foremost, I think it's seen as a huge opportunity and a bit of an untapped resource that
Mm,
historically hasn't been or hasn't had a lot of focus. It's not a simple process, I would say. I think when we speak to investors, particularly those international looking at some of these emerging climate tech markets from the US and maybe Europe, looking at the Middle East and Asia, there's probably a lack of understanding and knowledge about how to enter those markets. So you're probably looking to work with partners that you trust, have potentially worked with before, that can actually gain or give you access into those markets to at least get a foothold. And I think once you've been able to get through that process, it's then building those local partnerships and the local ecosystem to really support you in truly understanding what the opportunity is in that potential market. The Middle East is a fantastic example. As you say, we spent some time there earlier this year, and I think there's a lot of policy alignment in the Middle East that's supporting this agenda. At the moment, you probably just haven't got the right vehicles to deploy some of that capital, both
mm.
domestic and international capital, into that region. And so I think as this kind of the incentives grow and you see a lot more, hopefully, deployment and frameworks come into place, you'll see a lot more focus and some of those opportunities in these emerging markets being realized.
Yeah, that's a really interesting point on, how the role kind of national priorities, like you mentioned, in the Middle East, impacting investment on the ground, especially in some of these climate tech areas. Maybe Julia, turning it back to you, we talked a bit about what I think probably my favorite takeaway from this report was that chart you showed of the different breakdown in climate tech vertical funding and what was driving that, right? Like in India, we're seeing micromobility. In the Middle East, we're seeing that trend around food and ag security. Tell us a little bit more about that. How much are you seeing these sort of national priorities driven by what's kind of challenges and opportunities on the ground are impacting the type of investment that are going into those regions?
It's funny how interconnected they are in
Yeah,
so many countries that aren't the US. I
yeah.
remember going to Canada one year and talking to a VC and saying like, why isn't there more like private VC in Canada? And they said, well, the government gives you so much money. Why wouldn't you take it? And so government priorities do really tend to trickle down in a lot of markets that don't have a very active VC environment and don't already have that capital stack set up. And it's also because people are thinking about, okay, I've got a startup here. I want to put money into it, but I don't, you need to think about who's going to be putting money into it afterwards. And so if you have alignment between what that startup is doing and what the government wants to put money into, there will be infrastructure, there will be demand, that there will be policy support coming down the line. So that's why I think it's such a good signal what the government is thinking about for what is going to get even private investment. So India is a great example. So it has national missions, and that is really what brought this cheap solar to India. So there was a
Oh,
very clear policy directive, and it said, we are going to do solar. It is crucially important for our country. And there were targets and there was funding behind it. And of course, that was big companies and developers going in and using that support. But it also meant that there had to be innovation in order to better distribute that. So thinking about like the rooftop solar side of things and the manufacturing. So these national priorities are the things that, especially in these more emerging markets, I think will dictate a lot of where the funding goes. And similarly, in MENA, a lot of the funding directly kind of trickles down from the sovereign wealth funds, from their priorities. And they are pretty clear about like these are the things that are important to us. You have the cities that are so interested in like innovation and bringing new tech there, but then you also have this idea of like self-sufficiency that's really important. And when I was in MENA, this is what I saw over and
mm,
over again is people saying like we want to do something that aligns with the place where we are located, and we're being told that that's food security, it's ag tech. Europe and LATAM, I think it's much more of a like market dynamic rather than key policies being filtered
mm.
down because they are very diverse. They have a lot of different things going on. They have access to other markets who are just quite large themselves. So there it's more about like where do we see a gap? Where do we see something that we can leverage? Because there is kind of an easier route into other large markets like the US.
Definitely. I mean, uh, well, I can say more about this in a bit, but just coming from this trip to China, I think that resonates. That type of top-down industrial policy, creating bottoms-up innovation, really resonates, right? There's the 5-year plan. The last couple 5-year plans have been really prioritizing modernizing industry, industrial modernization, focusing on the real economy, right? And so there's been a huge focus on building out these clean energy supply chains, new energy vehicles. There's been a lot of incentives, but also kind of like top-down KPIs set by the government to do this. And that's how you've seen this hyper-competitive environment going after EVs, solar, batteries, building out those supply chains, building out those manufacturing ecosystems really evolve. So I think it's an interesting kind of case in point of China, India, Middle East, where you're seeing that type of top-down national priority creating that bottoms-up innovation. And I think, you know, speaking of bottoms-up innovation, right? Innovation doesn't just happen without people. There's a lot of ingredients in terms of people, in terms of resources, to actually create these companies, to create these unicorns in these markets. Tom, I want to go back to you. What are the ingredients you're seeing on the ground as you're talking to founders, as you're talking to companies who are actually building some of these technologies? What are some of those ingredients for creating unicorns? And how do you see that trend of these companies getting to that, Series B, Series C growth stage, shifting more towards those mega deals and growth?
Yeah, because I think there's probably a couple of key things here, and you touch on people there. I think first and foremost, sometimes we forget about the management teams and the people behind the businesses, and I think that's one of the key things that we see in those companies that have really truly been able to scale and grow to that unicorn status, achieve some of those mega deals, particularly in the US or Europe. That they've had really strong management teams that have been able to ride those challenges and those peaks and troughs, I guess, as you go through this journey. They've been able to demonstrate how they've got across that valley of death that I know we'll probably mention and speak to as part of this discussion. But I think that is a key element, and I think it's those management teams that demonstrate that resilience really help sort of showcase how they can create that unicorn or strive to become a potential unicorn. I think there's probably another couple of things, and particularly in where we are today, maybe compared to 3 or 4 years ago, unit economics is playing a huge role. You need a technology that is coming to market that can compete on a cost parity to incumbents. If we are seeing less of a focus on or less of a desire
Mm,
for a green premium on certain
yeah.
products as well. So I think that's another key thing. And I think fundamentally, you want to ensure that as a company, you're solving a problem that is needed, as opposed to you've got a solution looking for a problem. That's fundamental to how you can kind of achieve moving into those kind of mega deals. And I think the final point I'll probably make is that it requires a mature pipeline of scaled projects that
Mm.
demonstrates that unit economics. You've got policy stability, and then with those two things, you can then have investors come in and contribute and commit bigger tickets that enable some of those mega deals and growth to occur.
One interesting trend I saw as well in the charts that Julia shared was that kind of split between domestic and international investment going into some of these markets, especially looking at India, how there's a lot of domestic deals getting done, but when you actually look at it from a dollar standpoint, an investment standpoint, there were it was a lot more concentrated in terms of international. HSBC is obviously playing in some of these markets. So, Tom, I'm curious, how should companies be thinking about that balance of domestic versus international investment, right? When should they be thinking about going more towards domestic investors? When should they be thinking about going out more towards international investment, especially keeping that kind of like mega growth journey in mind?
Yeah, I think generally we've seen that domestic capital is really vital for early validation, getting your company up and running through that initial pilot stage potentially, whether that's through the local market that you're in, through grant funding, or through local or domestic VCs that can introduce you into that local ecosystem and that market to really support and scale those initial few months or years. I think international capital is probably should be seen more as a strategic enabler. It should be something that helps you support where you want to take your technology or where you want to take your company through deployment or market access. I think there's probably three things that uh, international investors can really accelerate for you. The first, as I said, is that market access and credibility. If you look at some of the technologies we've seen enter the Middle East from the US, they have a Middle Eastern investor on their cap table, and it really supports building out those relationships in that local market. I think the second point is when you're a startup in Europe looking at Asia Pacific potentially, you may not have a good, strong understanding of what the policy and incentive framework is in that market. So having international capital and investors that can support you with that understanding is really key. And I think the last one is potential complementarity between your technology and a potential investor who is more a strategic investor. So how can they actually support validation or some of the manufacturing, or even look at sort of joint ventures between your technology and some of those more strategic investors as well. So that's how I would really kind of summarize the difference between that domestic and international. I think domestic is very much early stage, get through that validation, and then look to that strategic international capital to help you grow and scale.
Yeah, that makes a lot of sense. I think that's given us a pretty good picture, right, of the investment investor landscape. I want to switch a bit over to the project and deployment landscape because, as Julia said, projects deployment, that is probably the biggest signal in terms of climate tech success. Um, the chart that stuck out to me is the ammonia chart because of how pink it was. Pink meaning it's in development, it's announced, it's not actually up and running and operational yet. And I think throughout a lot of the report, a lot of the sectors we were looking at across small modular reactors and nuclear, sustainable aviation fuels, ammonia, long-duration energy storage, industrial decarb, a lot of these have a lot of first of a kind ambition. There's a lot of companies that have been able to get their tech to the stage where they're ready to deploy it at demonstration, at first commercial scale. But a lot of these are still pink, right? A lot of these are still in that announcement development phase. Julia, we've been spending a lot of time tracking these projects all around the world at Sightline. How could we see some of that pink turn into purple and green, start to turn into actual construction and operation?
The key thing for me that unlocks a lot of this is really domestic demand. Export markets have been kind of used as a get out of jail free card for demand for a long time. When we started to see the beginnings of the hydrogen hype cycle, the big thing was like if you had a subsidy to make hydrogen, you were just announcing that you were making a project because everyone thought it was going to be a gold rush. And when we would then go and talk to the people building those projects, and we'd say, like, great, who's your off taker? Like, how are you locating it so that you're near demand? They would say, no, 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 export market, export. And there's a few cases where that works, right? There are some high profile agreements between countries that, can work economically if you do it the right way. But it's incredibly competitive. And that's why it's been so tough for so many of these projects. We need much better matching between a market and a tech. So we need to see projects that can actually rely on like the market where they are, because it's so much easier to just manage the logistics and the supply chain if everything is kind of concentrated. So something that is a bit more consumer facing or distributed, that needs to look for regions that are seeing a lot of growth in personal wealth. So I'm thinking like Southeast Asia and India, places where there's a lot of growth and where you could see things take off that are more focused on the consumer. Where you have industry, it really has to match up with players that have access to a supply chain that can potentially work for it. And then that key thing is having centralized infrastructure. That underpins so much of the like massive projects and deployment that we need to see across energy and industry. So in Europe, they're building hubs for CO2 transport and storage, and that's really being run by some very large players and supported with government funding. So it's going to be really difficult to be an exporter right now just because of tariffs and trade wars. And so I think that what you'll see happening is a lot of tech kind of turning a little bit more inward. That may mean that things aren't as optimized as they could be, because ideally, once you have developed your tech and you've proven it, you start looking for the place where you can get the cheapest inputs, and ideally the cheapest transportation. You can chase those input costs and competitiveness. I don't think it'll be as simple as that for now. So I think the key thing is like, what can you sell where you are?
All of it. Dom, what about you? You're at HSBC, you're working with financing a lot of these first of a kind projects, ambitions. What's your take on how we could see some of this accelerate?
Yeah, I think we spent a lot of the time looking at first of a kind projects, and I think fundamentally we need to kind of see a bit of a shift in the capital. So I think there's two things. There's the finance, and then there's the kind of more ecosystem around first of a kind projects. And I think on the finance side, we need to see a bit more of a shift from kind of one-off grants funding to some of these more blended finance solutions that crowd in investment into projects, and from multiple different sources, whether that's multinational development banks through to commercial lenders like HSBC, and then some of the more traditional infrastructure equity investors that we see as well. I think the second piece on the financing side is that we're really talking to a lot of our clients about is when you're doing your first of a kind projects, you want to put in instruments that are also scalable alongside the project as well. So the finance and the capital structures you're putting in place should be able to scale with those projects as well. You don't want to go from your first of a kind to your second of a kind and all of a sudden have to build a new capital stack for that second project and then into your third. And I think the third element, which I'm actually is quite interesting and I'm kind of personally tracking at the moment, is within climate tech, you are actually seeing a bit of an evolution of that capital stack to the
Mm.
point where you've got new strategies coming into the market. So a couple of examples would be around credit strategies that you're now seeing. So more from VC funds are now looking away from equity to actually can they look at credit strategies to deploy debt into some of those project companies. And then a great example of that is Galvanize that just
Yeah.
launched their new credit strategy. You've got Concrete Transition Capital who are looking to set up a new debt vehicle to support projects in that cement concrete space to really accelerate and crowd in additional capital. So I think on the finance side, those are the key things that we probably need to get alignment on to see more deployment. And then on the ecosystems piece is it's not just finance that we found is the challenge within first of a kind. It is a lot of the time about knowledge and understanding of how to deploy some of these projects. A lot of startups are coming through where they haven't actually gone through that experience before, and so it's how that they can educate themselves, build the ecosystem around them, and bring in the right players that can support some of that deployment and some of those efforts as well. So those are kind of what I would say are the key things that will really enable first of a kinds to deploy and then scale further.
Yeah, I like that. It's really the kind of building that right capital stack around the risks associated with scaling capital intensive physical projects. And it's also really enabling that ecosystem to evolve to actually scale that deployment as well. Um, I know we've gotten a lot of good questions from the audience, so I'll wrap this up with one to two more questions, then we can get to the audience questions. We've talked a bit about Europe, we've talked a bit about emerging markets. I want to double down a bit further into markets outside of the US and Europe. I think oftentimes in climate tech we talk a lot about the US and Europe as like the two key leaders, but as we saw in the report, there's a lot of bottoms up innovation across these verticals. Julia, I'll start with you. Which markets outside of US and Europe do you think are bellwethers for climate right now? And what should we be watching?
The ones that I'm paying a lot of attention to are LATAM and then Southeast Asia. And Singapore is really like the gate into Southeast Asia. So it's kind of like look there to see what's going to spread to the rest of the region. I think LATAM has a lot of the ingredients that you need for scale, and it's about accelerating those. So it's like you have everything that you need and you just need to like bake the cake. And then Southeast Asia has a lot of scale and growth. These are fast-growing economies. There is a lot happening there. They're keen to build out infrastructure. So I think in terms of like deployment and what could move pretty quickly, I'm looking at Southeast Asia. In LATAM, I almost see it as kind of the next Europe in a way because the
Mm,
nations tend to like cooperate quite a lot. They act sometimes as a bloc, and I'm thinking about how they've built out grid infrastructure across a number of different countries. And they're also willing to invest in big industries. Like you go to Brazil, you will see massive industries, and they are kind of willing to go their own way as well. You know, the ethanol industry is huge in the US, but it's massive in Brazil. And it's like, you know, on a scale there that is pretty unique if you look across the whole world. But there is going to be a lot of reliance initially on things like carbon credit generation and Amazon. So this idea of like climate still being a motivating factor for a lot of tech, I think if you continue to see that in Latin America, you're going to continue to see it elsewhere. The place that I haven't talked about, which is you kind of ignore it at your peril whenever you're talking about anything in climate and tech, is China. And you teased us at the beginning, Kim, by saying that you
yeah.
just came back from there. Like, give us the download. What's happening on the ground?
Yeah, well, first of all, I was going to write something up to our clients and in the newsletter on it. And then I realized that it would actually take a full series to kind of explain all of the context that's happening in China. So I'll try to wrap it into three key takeaways, but we'll be publishing a lot more for Sightline clients, for CTVC newsletter readers on China in the upcoming couple of months. I think to that initial point of industrial policy, of national priorities being the key driver for a lot of climate tech innovation, that rings extremely true in China. That is like the first point here is there is that steadfast, that commitment to industrial policy where the government, in a way, I think of it as a pyramid, right? There's like the CCP here coming up with their 5-year plan saying that modernizing industry is a key priority. Building the real economy, building science and tech is the real priority. And then it trickles down through all levels of the government, where it actually creates that public and private partnership that we talk about so much that enables a lot of this scale, this deployment and manufacturing at scale. And so what you'll actually see in China is that you'll have local governments do a lot of that decentralized financing and deployment. You'll have local governments who kind of follow the pillars of the 5-year plan almost have their KPIs set for what they need to achieve. There's a great example of this in the last 5 years on new energy vehicles. That was a big national priority to create new energy vehicle, electric vehicle industry. You had all the different local governments then go and were incentivized to create their own EV leader, their own EV winner, and they would get pretty creative about financing, right? They would actually go and say, okay, let's build up an industry fund, have 20% of that total capital of the fund come from local government, have the other 70%, 80% actually come from a strategic or a state-owned enterprise, have that fund specifically focusing on EVs. Then what they could also do is identify sites, identify land that they could actually use to build factories. Companies could come to them and essentially have the local government help find the land, streamline permits, finance part of the factory, then lease them the factory back for the next 10 years at a discounted rate. So that challenge, I think you often see in the West around having to raise a ton of equity capital to build that first of a kind or to build that very capital intensive multi-hundred million factory is somewhat, mitigated, right? In China, where that upfront capex cost they can mitigate because everyone's sort of on the same side of the table, trying to drive GDP growth, trying to achieve those, 5-year plan priorities. So that's just one case in point, but I think there's my big takeaway is like there's a lot in a way there's a lot to learn from China and how they've used that industrial policy muscle to create that bottoms up innovation that we're talking about today. And I think that is the key to how you see so much of their ability to manufacture at scale move so quickly. There's a lot of other dynamics as well, but that is kind of, I think, the first step in how they've been able to build EVs, build solar, dominate all of these battery and clean energy supply chains. So more to come there, but I do want to open up to audience questions because we have a couple minutes left, and I want to make good on my promise of getting to most of them. So first question here. Uh, what differences are there between the UK and EU? Where is the UK ahead and behind? I think all four of us, or all three of us here are sitting in the UK. So yes, that is an important differentiation to look at the UK in addition to just looking at Europe. Um, Either Julie or Tom, feel free to take this one.
Yeah, I mean, I've literally just got back from a trip to Paris and Berlin, and I think while I was there, it was quite interesting seeing the different dynamic in terms of some of the climate tech VCs now looking broader than just the environmental benefits from some of the technologies that they're investing in. I think energy security, dependence, resilience is becoming key across Europe, and we've obviously seen that over the last couple of years. So I'd say that is to play in the UK, but I just think there's been a greater pivot in Europe than maybe the UK, and so that would probably be the kind of the main difference I sort of saw on the ground during my time there. I think the EU is probably, as the report highlights, just ahead of most markets in terms of regulatory and policy alignment as well. And they do seem to be kind of at the forefront, particularly in terms of the EU ETS and CBAM, for example, as well. So those would kind of be kind of a couple of key things that I'd touch on there. But I'm sure Julia has other thoughts on that as well.
Yeah, the thing that sticks out to me about the UK is that they are very willing to take an idea and sort of follow it through to completion and really support that. So I mentioned early on the contracts for difference for the CO2 pipelines and the idea of trying to use the North Sea in a different way. So not oil exploration, but now CO2 storage. And I think that where the UK has chosen these really specific things, they've done well in terms of supporting them. And they also have some places or some companies that are thinking about things that I think will continue to show up in the conversations. So you do have Drax, who has been such a champion for BECS, which we are now seeing as something that's being talked about in Scandinavia, something that's being talked about in the US. But it's hard to get around the fact that the UK is just a smaller, less diverse market. Like Europe has vast differences going from like Portugal all the way through to Greece. There's just a lot of different markets there and a lot of different opportunities. And I think that diversity is really key to the success of a lot of climate tech.
Yeah, that makes sense. I mean, continuing with the Europe thread here, someone asked, considering that Europe has seen a decline of investments, especially in markets where economics are not desirable due to Chinese competition, I think maybe we're calling out batteries and Northvolt here. Where do you see capital flowing the most in terms of climate tech in Europe?
For
I
me,
think
it's really been around the things that are kind of needed. So I think Europe is being very smart in terms of like looking at other markets and seeing what's happening. So I'm starting to hear a lot more about like innovation around data centers. And of course, there was that massive N scale deal. And they're looking at what happened in the US and saying, like, okay, let's be prepared for this.
It's
Let's
coming.
think about grid infrastructure. Let's think about what we have to do there. Um, and Tom, what's coming up on your radar?
I'd echo some of that. I think grid infrastructure, grid reliability is a key one. We're also seeing quite a lot of focus around sort of circular economy. That seems to be coming up quite a lot actually in Europe. And whether that's technology developed here but being deployed outside of Europe, but there still seems to be that kind of as a trend that we've seen, particularly over the course of this year.
Yeah,
Makes a lot of
everything
sense.
efficient.
Um, Someone had a question on demand because I do think, Julia, you called out demand is domestic demand in particular is the biggest driver for scale and deployment. Could you help us understand what might be hindering factors to demand as well as what could be done to boost it? There's a lot there, but maybe we unpack one to two.
I mean, demand doesn't happen without a policy push in the beginning. So you need some government support there to get anything off the ground. And I think that's true of the demand that I've seen from virtually every market. The only way to kind of circumvent government support is to have companies for whom whatever they're buying is not a massive part of the cost of whatever they're selling. And I'm basically thinking about how a lot of automakers were kind of early champions for green steel, because if they think about their luxury cars, even a pretty big premium on steel doesn't massively increase the price of it because there's so much else that goes into it. So there are niches there where if you can be creating something for a market that is focused on sustainability and doesn't impact the price too much, that's kind of a sweet spot for demand. But the things that massively scale, they start with subsidies, they get bigger, they get cheaper. That's when the market steps in.
I love it. All right. We have time for one last question. I'm actually going to riff a bit here because we got a lot of really good, interesting deep dives from Julia, from Tom, on what they're seeing on the ground. But I want to pull it back a bit to end on this question, which is what was your favorite takeaway from the report? I mean, Julia, you spent a lot of time reading it, writing it with the team. Obviously, Tom, you also spent a lot of time reading it and collaborating with us. Like, what was your favorite takeaway from the report? Or most interesting, surprising takeaway?
I think for me, the most surprising takeaway was the insight on the India market and that path to
Mm,
exits, and actually India being the leader for climate tech IPOs. I just didn't expect that or hadn't seen that as any research prior to seeing this report. So that's been very interesting for us and something that we're looking to try and understand a little bit more off the back of the report being published.
love
Thank
it.
you, Tom, for giving me time to think. I'm going to give you a super niche one because I think Tom has highlighted the most fun one from the report, which is that when I was looking at the types of deals in a lot of these markets, so many of them were coming up as like other. So when you look at the deals charts, there's a big chunk of everything that's kind of other. And what that says to me is the point that Tom made about different types of financing and people getting creative is really important because when I was looking at this, it was a lot of like strategic investment, which meant like companies trying to get into a market by like investing in a startup. So I think you're going to continue to see that creativity. I think it's going to show up in the numbers as interesting other slices of deals, but I'm tracking that because I think it's going to be repeated in other places.
Amazing. All right. Well, Thank you all for all of these incredible insights, takeaways, lots more to come in terms of Sightline and HSBC collaboration on globalization. I think in this time and age where, the world is becoming more and more deglobalized, but also it's so incredibly important for climate and energy innovation to be happening on the ground in all these different regions. We are going to be doing a lot more to cover these regions, cover China as well. So look out for more on all of those fronts. But thank you all for joining. I know it's early and late for some of you. We'll share the recording. We'll share the takeaways with you all as a follow-up. So looking forward to it. And feel free to ping us at any time. Hello@sightlineclimate.com if you're interested in any more takeaways or learn more about what we're up to. Thank you all.
Thanks, everyone.